We are here for our final session of the fundraising track in Austin Startup Week 2023, sponsored by IUGO. Thank you, IUGO. We have a very exciting session here. I think obviously there's 100 people trying to get in outside. Y'all are the lucky ones. Hello to everyone upstairs watching on the screen as well. Usually in the staging area, we have founders coming out ready to pitch the audience. We've flipped the script here with our partners from FIESTA, and we have several local funders and venture capitalists here ready to pitch you. And this is an opportunity for you to discover their investment theses, learn a little bit about the personality of the investors, and use that information to inform your fundraising strategy on who may be a best fit. And like I mentioned, we're doing this with our partners at FIESTA. It's the thriving meetup that happens here at least once a month. I feel like sometimes maybe more than once a month at Capital Factory in this room. And it's a platform for entrepreneurs to plug in, meet the investors, meet their peers, and just really better belong to the Austin startup community. And so without further ado, let's welcome the lead chief of FIESTA, Cherie Warner. Welcome, Cherie. Yeah.
Thanks, Nick. Can y'all hear me? Oh, good. I'm so excited to be here. And before we begin, I just want to thank these funders who have given time up out of their day to be here. I also want to give a big shout out to Austin Startup Week and everybody that is making this event possible. So let's give them a big clap, round of applause. And thank y'all for being here. So, and there's people waiting outside. It just always blows my mind. So the heart of FIESTA is helping you, the founder, kind of navigate this vast ecosystem. And we do that by hosting our monthly events, which is next Tuesday, not the third Tuesday, but next Tuesday we have our event. We also do our F3 women's events, and then we do events like this so that we can help you, the founder, kind of discover this ecosystem to be seen and to be connected with others. So without further ado, this is how it's going to work. We are going to have our funders come up. I'm going to introduce them. And we have Haley in the back. So Haley's under the television. And she's going to hold up a sign when it's time for them, like they have one. Oh, you got them 1 minute. Good. So, and then they will go off and I'll introduce the next person. So that's how it's going to work. And then at the end, we do have Q&A. So this is an opportunity. There's some new funds here in Austin. I'm excited about introducing them to y'all. And so with that, I'm going to go ahead and begin. So the first person is Patrick Farrell with Potomac Angel Capital. They're angels from Washington, D.C. area, independently investing in early stage companies. Come on up. Let's get started. Thanks for being here.
Hey everyone, thanks for having me this afternoon. My name is Patrick Farrell, and I'm the co-founder and executive director of Potomac Angel Capital. We're an angel network based out of Washington, D.C. that invests in mission-driven companies for mutual financial benefit, lasting impact, and most importantly, meaningful relationship. My background is as a founder, and I was part of the founding team on a cybersecurity startup that had an exit in 2020. And while being part of that experience, I learned two main things. First, as many of you in this room know, startups are incredibly hard. And the second was that the spiritual and emotional health of the founders and the founding team was probably one of the most critical aspects to whether a startup would be successful or not. And so when that business exited, me and my co-founder Mike started talking about how could we be a source of capital, but also how could we be builders of people who built the businesses? How could we be builders of people first? And so we ended up convincing some crazy angel investors in the DC area to join us in that endeavor and launch Potomac Angel Capital in January of 2022. Since then, we've done 11 deals, deployed $2.7 million in capital, so about an average check size of about $250,000, and really with the focus of investing in founders who know that they need support for the journey and are looking for relationships that get them across the finish line. We also have an aspect of our group that invests in purpose-driven companies, so companies that are intentional about their impact, whether internally with their employees, but also externally using their product or service to kind of bless the world and their stakeholders. We invest in pre-seed and seed round companies, so we're early stage. That's where we really get within the founding team and walk alongside the founders. We're industry agnostic, geographically focused here in the United States. And for us, we're really looking for founders that have a majority ownership of their business because we're kind of betting on the person. And then also looking for businesses that and founders that are open to relationship, as I mentioned earlier. So if you'd like to get to know us better, feel free to visit us at our website, PotomacAngelCapital.com. And we're new to Austin, so we're excited to be here in this community. Thanks for having me.
Great job. Thanks for kicking us off. I meant to say, we have slides for each of the funders that are pitching. So there's a QR code. If you scan it, it'll give you information about them. So be sure to scan anybody that you're interested in following up with. Next, I have Nia Price with Forum Ventures. Forum Ventures is an early stage fund, B2B SaaS focused, and they are a studio with rolling virtual accelerator, as well as seed funding led by former founders and early operators that invest across North America. Come on up, friend.
Hi, everyone. If you are an early stage founder building a B2B SaaS focused company and you're looking for an investor that's a team of over 30 of former founders and operators, then Forum is the fund for you. Hi, everyone. My name's Nia. I work for Forum Ventures. Forum was founded 10 years ago in San Francisco. We have been around since then and have amazing LPs that have invested in our fund. We have 5 currently that we're deploying out of and more to come from there. So we are not going anywhere. Today, we have offices in Toronto and New York, but the majority of the work that we do is virtual, which is how I, a Canadian, now live here in Austin. Coming to the Austin ecosystem has been absolutely amazing. So I want to thank Capital Factory for having me today, and Cherie, who's literally one of the nicest people I've ever met in my entire life, for having me come speak here today to share more about Forum. So as I shared before, Forum invests exclusively in early stage B2B SaaS, so that's everything seed and before. Forum is mainly virtual, but as I said, offices in Toronto and New York. And the main focus that we have is investing across North America. However, we do a few deals internationally as well. And as Cherie shared, there are 3 main ways that we invest in founders. First, we have a studio. We vet ideas for companies internally. We have an engineering team that then builds those companies. And then we look for a founder to partner with to help grow and scale that company. Next, we also have an accelerator. That is where the majority of our investments are done out of. And we invest $100K into founders right at the beginning of our accelerator, not at the end. So you can deploy that capital and we can help you along your journey. And it is on a rolling basis. So we're always investing in new founders. And it's virtual as well. So looking for founders from everywhere. The key factor of our accelerator is this really focused on go-to-market and sales. And it's backed by a platform team of 7, which is one of the largest for an early stage fund. And we also have 4 managing directors on our team, one of which will join your team and specifically work with you on a weekly basis. They have come from backgrounds at Hootsuite, Shopify. 2 of them have even built companies that currently have raised over $15 million. And then we also have a seed fund. And the focus of that is to reinvest into our accelerator companies as well as net new investments too. So we know the metrics that you need to read out of our accelerator in order to be successful as you continue to grow. And we've done 66 deals to date this year alone. We have a portfolio of over 300, and we're not slowing down. We're looking to do 20 more deals before the end of this year, and then the same number next year as well. So if you are an early stage founder who wants to join our portfolio, feel free to reach out to us on our website, which is forumvc.com, or me directly, which is just my first name, at forumvc.com. And you can join our amazing portfolio, which includes founders from Austin, such as Dosiform, which is a Capital Factory company, Pet Pair, and Legal Karma, who have both raised over $1 million seed rounds within the last 16 months, and Route Fusion, which has raised $14 million. So join Forum and our B2B SaaS empire. Thank you.
Thanks, Cherie. Hey. Yes, watch your step. Okay, next up is David Perez Hernandez with Robley Ventures, which means oak, and they invest in pre-seed to A founders and building products that empower humans to better work and learn.
Hey, everyone. Hello. Can you hear me? Good. My name is David Perez Hernandez. I'm half Colombian, half Mexican. If there's anyone else in the room. I work for Roble Ventures. We're in some ways like a startup. We're a Fund One, $26 million, investing in two big areas: future of work, how we work and how we can be more productive, more collaborative, and then future of learning. Our fund's thesis is that technology can be a vehicle to empower humans to make us better, and especially in a time of AI when we're questioning that a ton. I took a few other notes. We invest in the US, and then we also invest in Latin America. So if you're a LATAM founder, we're super excited to connect. Three of the ways that we help, so our check sizes, we invest anywhere from $200,000 to $2 million in pre-seed, post-seed, and Series A. And then in addition to capital, there's three ways that we help our founders. The first one is we help you with your go-to-market strategy. We have a lot of in-house experts that we've worked with throughout our careers. And so we help you sort of come up with a go-to-market motion. And then we also try to do our best to be your BD folks. So we try to help bring warm leads, bring people that could be your potential customers within your ICP. The second way we help is we help through, we call it sort of company health, right? How do you know if your company's doing well? How do you know if you're setting yourself up for the next funding stage? How do you as a CEO and a founder know, what is going great and where are the areas that are on fire? So we help you identify what are all the things that you should be tracking, and we connect you with an expert in our network who helps you do that. And we have found that when we do that, it facilitates so many things. In addition to knowing how your company is doing, it'll really help you prepare for your next fundraising round, which we also support with. And then the last one that we help with at the Series A level is how to form an effective board. Our founding partner, Sergio, sat on 3 boards that went from pre-seed to unicorn, including Udemy, Kahoot, and Adaptive Insights. And he saw how much the board plays a huge role in the success of the company. So we want to be your partners in that side and help you think thoroughly how you can surround yourself with the people needed to build a long-term company. So we're Roble Ventures, investing in technology that empowers humans through future of work and future of learning education. And feel free to add me on LinkedIn or follow the fund on LinkedIn, and would be super happy to connect. Go Founders.
Thank you, David. Okay, next up is Alyssa Pardon with Growth Warrior Capital. They invest in diverse and female founders at seed and Series A who are building dangerous companies that fundamentally change the way we work, earn, and build wealth. Come on up.
Hey, y'all. How's it going? First of all, thank you so much to Cherie and to Capital Factory for this wonderful event. I have been lucky enough to be part of the Austin Startup ecosystem for the last 5 years, and Reverse Pitch is probably one of my favorite events that happens every year during Austin Startup Week. So thanks for being here. Again, my name is Alyssa Padron, kind of like the tequila, but a little less cool. I am the platform lead for Growth Warrior Capital. As Cherie said, we are a seed to Series A fund that is investing in companies that fundamentally change the way that we work, build, and earn wealth. What does that mean? We invest in the future of work, fintech, AI, and machine learning companies with a focus on diverse and female founders. So we stand out a little bit in the venture landscape. We are run by a Black female managing partner. Promise Phelan has spent the last 20 years building, scaling, and exiting companies in Silicon Valley. And my role as platform lead is to take all of that wonderful knowledge from her brain and distill it into something that is usable and something that's going to be really practical and actionable for our portfolio companies and beyond. So we consider ourselves high conviction, low volume. We're not interested in investing in like thousands of companies, but we will write check sizes anywhere from 500K to $1 million. So we really want to be hands-on with the companies that we're working with and the investments that we're making. So that's very much my role there. Part of that is also a very exciting opportunity to bring that knowledge and resources to the broader founder ecosystem. So we did that just about a week ago on Halloween. We hosted our very first Warrior Summit over at Oracle's headquarters. We had about 100 diverse and female founders in for a full day of content over what it means to be a founder and to transition into a CEO. So if you weren't able to join us on that day, we are putting together a 5-part newsletter series. So if you sign up on our website, gwc.vc, you'll get an email every week for the next 5 weeks from yours truly over content on what it means to transition from an early stage founder to a growth stage CEO. We're going to help you develop the executive leadership skills that you need to get to scale. So, in addition, we've got more exciting things. To make this whole pitch process easier, we built an AI-powered pitch deck builder. That's called Elevo. ELEVO, like elevate. So this is an AI-powered pitch deck builder that any founder can use. It's free to access at elevo.app, and you can put in your information there. It pulls in insights from investors on what actually matters to see in your pitch deck, and we're really excited for this to democratize access for founders from all backgrounds to be able to pitch better. So you can pitch us at gwc.vc. And again, my name is Alyssa Padron with Growth Warrior Capital. Thank you.
Thanks, Alyssa. And I happened to go to the summit last week, and it was fabulous. So next up, I have Joe Cardini with Antler. Antler is an on-ramp to venture capital that helps founders launch their startups from scratch. And they do this by surrounding you with everything you need from building at lightning speed.
Nailed it. Thank you. How's it going, guys? Just by a show of hands, how many of you guys are pre-seed founders or haven't raised venture capital? Awesome. Okay, great to see. So Antler is the largest pre-seed investor in the world, actually, most active pre-seed investor in the world. And we really believe 3 things need to be true for early stage founders. Number 1, they need to find the right co-founder. They need to find the right co-founding team. Number 2 is that they really need to test and iterate on really strong ideas in the right way. And then number 3 is they need to raise capital, whether that's venture capital or friends and family money. So Antler set out to solve those 3 things about 7 years ago, and we do that through a founder studio model. I'll get into the details of the founder studio model here in a second, but just for a high-level overview of how big Antler really is and how fast we've grown over the last 7 years, we started in Singapore, and we've grown to 27 locations now globally. We have 3 here in the US. We have Austin, Texas, we have New York City, and Boulder, Colorado. So that's where we operate these founder studio models. We bring about 70 founders into these founder studio models that have been selected from thousands of applications. So it's an extremely difficult process to get into an Antler residency, but once you're in an Antler residency, the odds of finding a strong co-founder are absolutely there. Fast forward to the end of the 8 weeks, we'll invest, $250K right at a 9% equity stake, and then we're really off to the races to start a really disruptive company. So, we like to think of Antler as a partner for the lifetime of the company. We can invest all the way through Series C and beyond, and we often use that vehicle that invests in that stage to follow on to our portfolio companies as well. So yeah, it's Antler at a high level. Happy to answer any of your questions later. Thank you.
Okay, next we have Jeff Blickman with Palm Ventures Studios. Palm Ventures rescues and builds companies that positively impact human and planetary health. Thank you. Sorry about that.
Thank you. Thanks. So Palm Ventures actually recently joined the Austin community in March of this past year. We invest kind of at this intersection of human and planetary health, but across all industries. And our typical check size is around 500 to 3 million. We look to lead in all of those cases. Only equity, we don't provide any debt. But to understand what we do and why we do it, have to know a little bit about the history of the business. So we're actually backed by a family office that's been doing turnaround ventures and private equity for over 30 years. They've acquired 65 companies. They've turned them around and have an amazing track record of a 21x return on invested capital. About 5 years ago, they started building companies as they were looking for investments in the turnaround space that didn't exist, and started a venture studio out of the Greenwich, Connecticut office. That venture studio evolved into 5 companies, one of which had a very meaningful exit for the family office, and that money was reinvested to build out what is now Palm Venture Studios. We have locations here in Austin, and after launching Austin over South by last year, or this year, we launched in Philadelphia, Boston, Las Vegas, and we have a couple other cities coming online soon. But what we do is we actually have a hybrid approach between studio and turnaround private equity. So we look actually for companies that are struggling to raise their seed or Series A, and we kind of provide this second chance at life. We come in and bring our studio resources, which are intended to help kind of remove distractions that can take up a lot of a founder's and founding team's time, as well as bring our turnaround expertise from the family office to play. So we really get in there in the trenches. We deploy meaningful capital. We get involved as another co-founder and bring someone from our family office as well as our studio team to bear, and we help turn businesses around. So if that's you or friends who are struggling to raise, like it's tough out there right now, especially in the early stage, welcome to introduce them to me or to anyone on my team. We've got a couple of people that couldn't get in. There's Nirjer, who's waving out in the glass. So thanks for having us, and it's Palm Venture Studios. Thanks.
Sorry. Okay, next up is Juliet Richard, and she is with the Artemis Fund. Their fund leads seed rounds for female-founded companies, democratizing wealth and fintech care and commerce enablement. Come on up.
Thank you, Cherie. Hi, everyone. I'm so happy to be here. So happy to meet you. I'm Juliet Richard. I'm an associate at the Artemis Fund. We invest in female founders democratizing wealth via fintech, care tech, and commerce enablement. We write $1 to $1.5 million checks to lead seed rounds. It's very important to us that we lead. I'm sure you guys know the statistics that female founders receive less than 2% of venture capital, which is just like not right. Yeah, boo. And we're here to fill that capital gap, and we need help, of course, but we're here to fill that capital gap, but we also provide the network and resources that female founders need to get from that seed stage to Series A. So we're very intentional with our support from board formation to thought partnership and raising capital. We are currently investing out of our second fund, which is a $50 million fund, writing $1 to $1.5 million checks, and we'll invest in 20 companies. So we have lots of time to spend with you. We are headquartered out of Houston. We invest geo-agnostically. I'm based in Austin, and community building, especially locally, is very important to us. I host a monthly breakfast for female founders. If any of you are local, I would love to see you there. It is a great opportunity to meet your peers, to talk more with me, and meet some other investors. I see some friendly faces in the audience. I'm just very happy to be here. If you have any questions, please let me know, or feel free to reach out on our website. Thank you.
Thanks, Juliet. Okay, number 8. So Aaron Perman is with S3 Ventures. They're based here in Austin for over 17 years. And S3 Ventures is the largest venture capital firm focused on Texas. They empower visionary founders with patient capital and true resources required to grow extraordinary, high-impact companies in business technology, digital experiences, and healthcare technology. Thanks, Aaron.
Hi, like she mentioned, Aaron Perman, partner at S3 Ventures, and we're really focused on investing in Texas headquartered companies or companies in the middle of the country. And we're primarily investing at the seed, Series A, and Series B stages. So typically investing anywhere from $500,000 up to $10 million initial check in companies doing $500,000 to $5 million of recurring revenue. And what's a little bit unique about us is we can lead or follow the seed, Series A, or Series B stage, but we'll look to put north of 20 million in over the life of a company, where we can actually lead multiple rounds for companies and really follow on throughout their whole life cycle. And a lot of that is because of our unique single LP model, where we've had the same sole LP for the last 17 years across all $900 million under management and across our current $250 million Fund 7 that we closed in 22 and have lots of dry powder to deploy out of. And so in addition to allowing us to go deeper and longer, it frees us from the typical time constraints of most venture funds where we can, effectively hold positions forever. It allows myself and the other partners to have more time to spend with our portfolio companies, along with, our full team of 12, because we're not out fundraising every 18 months. And it allows us to provide more resources to our portfolio where instead of having to spend, money on a back office and investor relations teams, it lets us make a hire like we did this year, which was a director of talent to help our portfolio companies hire executives and talent without having to pay external recruiters. And all of this work and effort, whether it's that or projects and other work we do for our portfolio, is all free to them. We don't charge them for anything. And so, like I said, we're based in Austin, focused on Texas headquartered companies, and would love to talk to y'all if you're raising money.
Thank you. So next up, we have Colleen Kadetsky with Iron Spring Ventures, an early stage digital industrial focused VC focusing to make legacy industry more productive, secure, and sustainable.
Howdy. So my name is Colleen Konetsky. I am a principal with Iron Spring Ventures. We're a fund that is headquartered here in Austin, Texas. And we are an industry-focused fund focused on digital industry or digital industrial. What does that mean? So we focus on the industries that make up over half the country's GDP and the industries that make our modern day lives possible. And so the 4 core areas that we focus on are construction, manufacturing, transport and logistics, and energy transition. And so why these industries? Our fund was born out of operators in these industries. Our network and our LP base are all boots on the ground. They own these businesses, sometimes these family, legacy, often analog businesses, right, that we believe are underinvested in, where we see a ton of opportunity. And so, what is the product that we're selling, right? Because there are a lot of venture funds out there. How do we differentiate, or how do we help you? We help startups specifically with go-to-market and commercialization in these industries. Selling into these industries can be difficult. It can be hard. And so that's where we can add the most value to our portfolio. Some of the more boring stuff, we're now on Fund 2. We finished Fund 1 last year. It was 61 million, 16 portfolio companies. Now on Fund 2, which is a bit a step change bigger, still fundraising the last little bit, but already made our first couple of investments. Let's see, most of the team is based here in Austin. In terms of geography, North America, made our first investment in Mexico last summer and have been looking a lot of deals in Latin America. And we invest early stage, seed and A, to really help at that go-to-market commercialization, sort of like impingement point, if you will. And average check size is usually 2.5 to 5 million. So if you're somebody that is building in one of these incredibly critical legacy industries, don't be afraid to reach out. Our website, ironspring.com, there's a form on there. That's usually the best way to reach us. So cheers.
Okay, next up is Rob Taylor with Silverton Partners, founded in 2006. Silverton is focused on funding and mentoring early stage startups led by founders who share in the commitment to disrupt growth markets and build enduring companies.
Okay, everybody, deep breath. You've only got a few more to go. We're almost there. Again, I'm Rob Taylor. I'm a partner at Silverton, based right here in Austin. We've been investing in early stage startups for nearly 20 years, which makes us one of the most longstanding and certainly one of the most active venture firms in Texas. We are investing early out of our 7th fund, which is a $250 million vehicle. We invest in seed and Series A stage businesses. And for us, that means we like to see some traction in the market, usually measured by revenue. Check sizes initially are 2 to 10 million. We can flex up or down. We are generalist investors, and while we have a tilt towards software and tech-enabled services, we do invest across sectors. So you'll see healthcare tech, cybersecurity, supply chain software, consumer marketplaces, all represented in our portfolio. We have a strong bias to invest in Texas. So 70% of our portfolio is based in the state. And of that 70%, the vast majority of those entrepreneurs are actually in Austin. Finally, we take a really high concentration, high conviction approach to investing. So we only invest in 8 to 12 companies a year. And so, what that means is we typically price and lead the rounds that we participate in. We almost always take a board seat. And we really take an active, engaging approach to walk the journey with our entrepreneurs and be helpful along the way. So that's the boilerplate and some nuggets on Silverton. Here's the part you need to pay attention to, which is why should you choose Silverton to fund your business? And it's really easy. And this is important. We will mitigate your failure risk and help you build a successful and enduring business. And that is not hyperbole. That is the truth. And the reason I know that is because Silverton invested in 2 of my companies and did just that. They helped me build great companies, both of which had successful outcomes. And you see, I've been an entrepreneur for 25 years, sitting in your seat. Only recently have become an investor after my last business that was Silverton-led exited about 2 years ago. And so I've been at Silverton working alongside the team across 2 companies for 12 years. And I've just seen firsthand and experienced the level of engagement, support, guidance. I mean, especially when things go sideways, because they will go sideways at some point. And that's really what you get with our firm. That level of engagement, support, and I'd be, honored to work with you to build your business. Thanks for listening.
Thanks, Rob. Okay, last but not least, we have Austin Lagoria with Sputnik ATX VC. Sputnik is an Austin-based VC firm and accelerator, providing early-stage founders with funding, training, and experience to help them reach their full potential. They select 4 to 6 startups each semester for a 13-week accelerator program. Come on up, Austin.
Hi, everyone. Really feeling for y'all up here. So I'm Austin. I'm with Sputnik ATX VC. So we invest $100K on a $3 million post-money safe note. We're industry agnostic. We invest around the world, but funding is really only half the story. Since before VCs were around, the model for a successful business has not changed. And that is, you build a product that customers want and then sell it to them. And that sounds really simple and obvious, but it's actually not. It's really complex. So I know everyone here can definitely build a product, right? But building a product that customers want, having the discipline and wisdom to stay within that realm early on, A/B testing, iterating, creating processes around the things that work. It's a science and it's a hard skill that, we believe it can be taught like math, coding, engineering. So that's what we do. We are a team of nerds who teach nerds how to sell. And for 13 weeks, you'll be in our office working with us down the street, Congress. And I'm not going to lie, it's a grueling process. We will overwhelm you with work. Some people cry also, not going to lie. But at the end, it will be worth it. And, funding may not even be like an eighth of the story, because I'm sure all the time, from them, they say, we want this amount of ARR, traction. So, you get traction, and then I assure you, VCs will shower you with term sheets. You'll be blocking them on LinkedIn, running away, blocking all of them. Yeah, that's really it. Thank you.
Okay, I'm going to invite everybody back on the stage, all the funders. And again, let's give them a big round of applause for taking time off to be with us today. I know they're all really busy. So now we're going to have some Q&A, but I do have one question that was sent in, and I'm going to wait till everybody's up here. and they can pass. Is there a mic to pass in the audience also? Okay, the question is, does venture capital get its funding from angel investors? And if so, could that be a conflict for startups seeking angel funding? Does venture capitalists get its funding from angel investors? And if so, could that be a conflict for startups seeking angel funding? And that was from Kyle. Perfect.
But also our angel guy might have a good. So some funds do have individual investors as their LPs, and this is something you can ask anyone you're asking for capital, like who makes up your LP set, if you're curious about that. Some funds will, like S3, have a single like institutional LP or whoever. We raise from a mix of individuals to institutions. As far as the conflict side, I don't know. Not that I'm aware of. I don't think it's a large issue, but maybe someone else.
Benefit, actually.
Yeah.
A lot of times funds that have individuals that are LPs, they've invited those individuals into their fund to be LPs because they have a great network of founders they've made angel investments to that then will feed them deals. And so I think it's probably only a positive if you're working with an angel that's also an LP in a venture fund or two, because that venture fund is going to pick up their call and take the referral because they know the angel's incentivized only to send them things that they want their personal money in.
Yeah, that's perfect. And I would just echo, like, for the investor, if you're invested in an early stage founder and then you're invested in a fund that then invests in that founder, you must really like the opportunity because you're basically double dipping. And so for investors that are doing that, that's a high conviction referral.
Any questions from the audience? I'm sure there's lots of questions. Yeah, raise your hand and mic will come to you.
So I had a question. Want to hear your opinion. I had a mentor. I thought I was doing something. I was supposed to guys from IIT put together an AI system for commercial real estate and construction, some of the biggest industry. And I did a lot of self-funding and thought I'd focus on sales. He has 3 successful exits, did really well, and he said I was highly irresponsible with self-funding. I thought focus on what's your opinion on that? What big pitfall of self-funding so much? Nothing wrong with it. Encourage that.
Yeah, I would say, especially given current market conditions, like if we can see somebody make traction as far as they can on their own without taking capital, we get excited. So.
Yeah, as a founder who's sat on both sides of this, your path to success is a very personal decision, right? And many founders choose to control their own destiny, bootstrap their business, grow gradually, make all those decisions themselves. The second you take venture money, that world changes for you, right? And there are reasons to do it. You want to go faster. You want to capture more market share quicker. You want partners to help you build the business. So there are pros and cons, but I would just go back to a very, very personal decision. It's based on your level of aspiration. And the other thing I would say is not all businesses are actually venture fundable. And so you have to sort of explore that at the early stages too, if that's something you aspire to.
Yeah, I'll quickly add on assembling your round. If you have the self-funding, that's incredible, right? But I will say, you can see investors not only as capital, but as sort of the strategic advisors that are going to be around you. And I do think from a lot of just companies I've seen that some of the best pre-seed, seed, Series A companies look for, especially pre-seed, look for a mix of institutional VC funds, because they're going to add the rigor of due diligence, of looking at your company, which is only going to make your future fundraising rounds easier. And then they also look for a mix of angel investors that, they might not be doing the deep diligence, but they can be strategic advisors. They can connect you to customers. They've done it before. So I would look at it through the lens of, in addition to capital, how do you surround yourself with a team that can help you scale, to be a huge exit?
Not to beat a dead horse, but I think Rob made a really, really good point around not every business is the right path for a venture fundraise. And I think for all of you, especially if you're earlier in your entrepreneurial career, I would look at it as, the typical venture path is when a fund leads your Series A or B, they are looking for every investment at the time they lead it to have the potential to return a fund. Most won't. It might only be one or two that actually do in a 20 investment fund, but to have that potential. And so what that means is you have a big enough market size where you could see potentially a $500 million or $1 billion exit one day. There are a lot of businesses that are great companies providing a lot of value to customer, but maybe if you multiply the price times the quantity of customers, what you can charge times quantity, you might only get to $30 or $40 million if you got to 20% market share or something. And by the way, 20% market share is that's a huge amount of market share. For those companies, you are way better off not raising a lot of venture capital. You may still raise a small amount of capital, maybe from angels and others, where they're really, really happy to get a 3x return in because you've raised less capital. You can do that with a $50 million or $100 million sale eventually to a private equity firm or a strategic or something like that. Or you get to 20 or 30 million a year in revenue or cash flowing 2 or 3 million a year. That's not a bad thing either. And so I think as you think about what you want to build, the venture capital path is a really, really specific path that is great for a lot of companies, but it's not the right path for a lot of other really, really good businesses.
As Julia mentioned, there's funding for women is only about 2%. What can we do as the Austin ecosystem to increase that number?
That's a lovely question, and we love Julia and the amazing work Artemis does. I'm a Black woman. Funding for Black women is way less than 1%. And so I think that, as Juliet shared with it being 2%, I think that, what you can do as an ecosystem is, and then my fund is a specific one that we only invest in B2B SaaS. And when you look at the B2B SaaS landscape, a lot of B2B SaaS founders come from being operators and have a background in kind of engineering. When you look at the amount of Black females who are in that space, even less. So it's hard to see. I would say already the numbers are stacked against you in terms of the number of founders that you're going to see, but the ones that are there and that have amazing traction, you'll see ones that have done amazing things with their burn rate in order to make sure that they have money in order to make it to their next round to keep their companies live. And I think as an ecosystem, it's really highlighting those amazing founders that are doing great work. There's going to be the AWS startup showcase upstairs for female founders after this. Support those founders. Make sure that you're amplifying them, make sure that you're making connections for them, and make sure that if you are a founder in those spaces, take advantage of all the resources, all the programs, and everything that's out there for you. And so that's really the main thing that I would say is really, it's already hard. There's already not that many. And I think the founders that are there deserve the support of the ecosystems that are out there for them. And Julia or anyone else.
So something that I've seen in the Austin ecosystem, and it's been really interesting to see as I've kind of delved into more of the Tulsa startup ecosystem. They're really starting to build things from scratch there. And it's exciting to see a lot of really great early stage accelerators, early stage programming, early stage funding. That's a really great opportunity. There's a lot of kind of acceleration in that area. A thing that I've noticed, especially within the Austin ecosystem, there's a lot of lack of support. Once you exit that accelerator, you've got a good 12 to 18 months before you're really ready for venture capital raises. A lot of the accelerators in Austin are typically set up for pre-seed companies who are going to be raising their first couple of thousand or first rounds from angels. And so I think about that 12 to 18 month period as a really critical time to lean on other founders for support, to make sure that as a founder, you're doing your part to make connections, you're coming to events like these, you're being an active part of the ecosystem. But I think as an ecosystem, like Nia said, just making sure that we support those founders, patronize those businesses, use them for your whatever your business is. If you can utilize a startup, and especially a female founded startup or a female woman of color founded startup, please do so. It's really important that we get these early stage companies past that 12 to 18 month just tranche and get them to the Series A stage, because as someone that is investing in Series A, there are not enough. There are not enough diverse and female Series A companies, and it's really just getting them past that 12 to 18 month period, which is, again, very much what I am setting out to do in my role as platform with Growth Warrior Capital. So as much as we can build in these resources past that pre-seed stage, that's what the ecosystem is needing right now.
the one thing I'd add is it also has to do with the investment firms. And, over my decade at S3, our team has transitioned a lot where now about 50% of our investment team is female. And as we have changed the makeup of our team, our deal flow of female founders wanting to talk to S3 and coming to S3 and the access we've had to deals has increased dramatically. And so if you look at now, like the percentage of female founders we've invested in as we've changed the makeup of our team, it's increased dramatically as well. And so I think some of it is the investment firms also increasing, the diversity of their investment teams. And that helps to then have them tap into the right networks to see more diverse, gender diverse founders.
Thank you very much. It was super interesting to listen to you. So my name is Maria Benitez. I'm the founder of Buenavida Wellness. We focus on technology to self-care and employees. And my question to you is like, what's the criteria that you choose before considering investing in a company? Is there any metrics specific, like what exactly what you're looking for? Thank you very much.
What stage are you at?
I'm sorry?
What stage are you at?
The stage I'm in seed.
Okay. So yeah, at a pre-seed seed level for at least Antler, it's all about the founding team, right? So we look for, what we call internally spikiness. And whether that to us is like, whatever you've done in the past, you've really succeeded at it. That can look like a lot of different things. It doesn't have to be one single thing, but for us, it really comes down to the founding team and your unique insights into what you're building.
More generally, I would say it depends on the stage, just for everyone else. So yeah, I mean, if you're that early, like he's saying, it's the founding team, the market size. It's not as quantitative, but as your revenue increases, you get a bigger team, you have more processes. People will be looking at, your CAC and LTV to see, how much fuel they just need to pour onto the fire. So it really depends on the stage.
I would just add, high level, I think I went from the operator side to the VC side. And so I'm learning a few things. And I think one of the things that you learn as a VC is, fortunately and unfortunately, you have to look at every opportunity through, can this be $100 million in ARR company if it's SaaS, right? Because the multiples are 10x, and that puts you in that big exit potential. Or if it's consumer, right, can it have crazy consumer growth? So I think on the SaaS side, right, you're looking at your ACVs, your average account volume per transaction, and then to your earlier point about how big the market is and how many people you go for, and what types of customers are you going for? Enterprise, mid-market, SMB. So it's almost like put your hat. Whenever I'm helping people with pitch decks, I help them sort of think through that and see sort of what is that thesis that you're giving the reader of the deck that, yeah, this could be a hugely venture-backed exitable company.
Firstly, thank you guys for doing this. Secondly, we're curious on how you guys are navigating core technology and IP in the current technological landscape, specifically within SaaS.
Be more specific. What can you be more specific? What do you mean by that?
Essentially, what percentage of actual code and or product a founding team is supposed to own before you guys will make an investment? Because many VCs, I'm a founder right now, that we are talking to, obviously are very, very strict and it's very hard to.
So I always think about these things as starting with the end in mind. And so for some companies, the end might be an IPO, but for most companies, the end's an acquisition, right? And so when you go through acquisition diligence, the buyer is going to ask, how much IP do you own? And they're going to require that you prove that you own every single piece of proprietary code you've written. And, anything that's open source, you're complying with the terms of the license agreement. And, that looks like having had every single person you've ever hired sign a IP release and assignment agreement. And it looks like having documentation on every open source package you used and showing that you're complying with those terms of the license agreement. And I've had situations where like a buyer didn't like this open source package. The company had to rewrite their code during the exit process to write it out because there was a buy you a beer license where if you ever meet the founder or the creator of the project at a bar, you have to buy them a beer, but otherwise it's free to use and redistribute. And the buyer was a large public company and was using a $1,500 an hour law firm. And the law firm was all in a frazzle that's an unlimited liability. What if you met them at a bar and you had to buy them unlimited beers and literally made the company change the open source package out? So that gives you, I mean, I had another situation where there was one engineer that was a contractor for 3 months, like 7 years ago, that they didn't have a release from. They had to track the person down and get them to sign the thing. And so I say, like, why do VCs care so much that the company owns a core IP? It's really thinking about the end in mind of the company performs great. They have multiple bids. They're exiting. It's going to be a 10, 20x return to the fund. And then you get through to legal diligence and you actually can't sell the business.
Hi, I'm Valerie, and I'm representing SwiftFit Events. We offer wellness events here in Austin and across Texas. But as a founder, it's a grueling process to create a successful company. How are you guys supporting your founders when it comes to mental health, overall health and wellness, to make sure that they don't leave? They may leave with a successful exit, but they leave broken. How do you guys prevent that?
I'll start by just saying that, as I mentioned in the pitch, like we lead with relationship. So we've had feedback from founders saying, "Hey, thankfully that you all are on our cap table because you're the person who asks about me and how I'm doing, and ask about my family and my dog and my kids, or ask about my hobbies, or am I getting enough sleep and things like that." And we believe as investors at Potomac Angel Capital, that's essential to building a successful business. And there's a lot of, as an angel network, we don't have a lot of the resources that a lot of the bigger funds have where they can kind of put resources and coaches and things around those people, but we can spend our time walking alongside those founders. And we found that in relationship, that's where it really gets fun because we know the business well. So we know what you're dealing with. And oftentimes founders, what we find is, they're going home to their spouses or their friends and they're trying to explain why they're so stressed or what's really hurting them. And it's really, really hard to bridge that gap. But if you have an investor who's relationally oriented and understands your business, those conversations tend to be really, really fruitful.
So I want to say thank you to SwiftFit Events. SwiftFit was a big part of our event at Warrior Summit, where in between every session, we had a short wellness break. So we had a facilitator that came in. We did a meditation in between one of our sessions. We had some breath work that we did. We made sure everybody was getting up and out of their chairs and doing some guided stretches. So thank you to SwiftFit Events for helping us with that and bringing that mental health aspect into our summit event. But also I want to recognize that this is an especially important topic for diverse and female founders. Getting up every morning and understanding that only 0.13% of Black and brown founders receive venture capital funding is a really difficult task to face. And I think that as we come together as a community and recognize these challenges, having an investor that looks like you, that has gone through this process, for us, having a Black female managing partner that has gone through the fundraising process several times over and understands just how difficult it can be, having that connection point is incredibly valuable. And so, for our fund within Platform, we make sure that our founders are connecting not just with myself and with our team, but connecting with each other to really connect on these specific pain points to where they are in building their business. This is something that I looked to build out within my last organization as well. Shout out to Div Inc., BIPOC-focused tech accelerator here in Austin. This is something that's incredibly important for diverse founders. So making sure that you have a network of founders that can understand the challenges that you're facing and have a space to be really open and honest about those conversations and the difficulties that you're facing. The number one thing that I can say to support your mental health as a founder is find community.
what do you expect to see in order to want to establish that relationship in the first place? And second layer is, what do you want that TLDR subject line so you backfill with
I'll go just super quick. Like, I'm that person. Like, if you're too early, like, you just get funneled to me and you hang out in my inbox for a while. I want a monthly update. I have a folder. They all get sorted in there. Maybe I don't look at it every single month, but I want it every single month so that when it's time, I can go back and say, here's their last 6 months of progress. Are we ready?
Yeah, I would say building relationships is incredibly important. We track our interactions with every single company, and on average, our portfolio companies, we knew them for at least 9 to 12 months before we invested. And so it's getting that initial meeting, but then absolutely love update emails, quarterly update emails, keeping them short and to the point. Maybe just a couple updates. My favorite emails, if you have them, have just high level, like revenue oriented metrics. If you've got new hires, if you've onboarded a bunch of new customers, we're looking for, signs of traction. And so that's what makes I get really excited when I see those update emails. In fact, there's a couple companies I've gotten update emails from that I now, with their permission, use as an example when I meet other pre-seed founders and I'm like, hey, do this.
I look at eventually every email that comes through my inbox. So if it landed in my inbox, no matter what the subject line is, I'll read it. Where I find companies get tripped up or founders get tripped up is they will send me 3 emails and they don't fit in our thesis. It's like if you aren't a company in kind of our 3 category areas or aren't a diverse founder and are emailing me, it's annoying. And that's what stops that relationship building or any And so I think other people might not open every email, and that's okay. But you can find people at events like this, or our breakfast, or other things, and build an actual relationship, not something that's transactional. That's what I've seen be successful.
Last thing I'll add, and I think it's been pretty well said, but we're people too, with friends and jobs and lots of things coming in our inbox. So give us some grace for that. And also, it gets really hard, at least as investors that I've heard from, when you walk up to us and the first thing you do is treat us like a bank or like somebody who can give you something, try to extract from us. We just like to talk to you and get to know your business, and just, so some grace for that would be awesome.
The only other thing in an email, just put enough in the first 2 sentences for someone to know, will you fit their thesis eventually? Not necessarily do you fit it today, but for instance, we invest in Texas and middle of the country based companies, and we do a lot of B2B software. And so 70% of cold emails I get don't tell me where the company's based, and I have to Google their name and find their LinkedIn and see where they live. And so if you're reaching out to a firm that invests in Texas in the middle of the country, say, hi, I'm based in Texas in the middle of the country, a sentence of what you do and some sense of what stage you are, even if it's earlier, but I have a product and I'm pre-revenue, or, we close our first 3 customers, just something to put some meat on it. And like these folks said, I get to inbox 0 3 to 4 times a week. I respond to pretty much every email. And if it's within the broad view of you will be a fit for us, maybe not now, but in 18 or 24 months, we could eventually invest, someone from our team pretty much meets with every single one of those opportunities. We probably do 200 first meetings a year, 30-minute Zooms or coffees or other things. And so, if you fit a thesis, most investors, if you at least tell them you fit the thesis, will respond.
All right. Well, that was a wonderful VC reverse pitch. We're going to do a quick group photo, but that wraps up the fundraising track at Austin Startup Week. I hope you enjoyed it. If you could not make it or want to watch it again, it's going to be on FIESTA's YouTube channel. Other than that, we'll see you at Higher Ground right now for the happy hour. Thank you.